My asset managers know the location, know the builders, can help their borrowers get what they need all the way through servicing through the day you pay off, and then we help you come back and do more.
The Weekly Friedman, your source for the most essential information in the default industry, with your host, Adam Friedman.
Hi, everyone, and welcome back. Today, I'm joined by Steven Klemp, Chief Servicing Officer at Renovo Financial, a firm that's been right in the center of the explosive growth of business purpose lending over the past few years. We've all watched as business purpose loans, once a niche, smaller part of the market, have become a major slice of the portfolios for many servicers and lenders. Higher yields, changing investor appetites, and a flood of capital have all played a part, but what's really driving it and what happens next? So Steve, thanks for joining us. I'm really glad to have you on here. To kick things off, I think everyone in the industry knows that there's just been a huge surge in business purpose lending. Like, where did that come from?
In my opinion, I think the majority of it came from bank appetites. I think banks did not find a home for the multifamily loans, for some of the investment properties, some of the things that your residential real estate investors wanted. And as that happened, entities like us, like Renovo, like a lot of others, found that capital and that way to lend. And then from there, I think the proof was in the pudding, right? If your performance was there and if you had the way to marry together the investors and the capital with really savvy real estate investors who knew what they were doing and operating, whether it's ground up, fix and flip, your DSCR, your term rental product, you get a good operator and you go back to that well. And that just kind of, in my opinion, that really saw the boom of what we're doing.
One thing I always think about is, what was everyone doing before? Like, all these people that can do a fix and flip, were they not doing it at this? They couldn't have been doing it at this volume, right? Like, if the lending wasn't there, what was happening?
So I think you had the haves and the have-nots. You had the folks who had kind of a private captive audience of capital, or, I've talked to people who said, oh, well, we had 5 generations of my family was investing in me, and they were taking personal loans out or whatever to give me the capital to do what I need to do, which is much different than how a lot of folks get started in whatever their business is, right? I know for me, I had a father-in-law that borrowed from his family to buy his first gas station. It was kind of that awesome American story for a lot of folks. And then I think you had the folks that were, hey, I'm buying a property that I'm living in, and after the required amount of time, I'm going to fix it up, I'm going to clean it up, and I'm going to move out of that. That was my entry in the industry, was buying a foreclosed home next to my mother while I was in college, coming home on the weekends and gutting it and ripping up the floorboards. My dad is a very handy guy and had fixed and flipped houses for a long time and was cleaning that up and doing it, and then getting to the point where, okay, I've been here long enough. Now I think I can put a renter in it and I can go and do another one. To the folks that were really good operators, the opportunity was not there to do it at the scale that they could handle. Not like it is today.
That story is really cool, because I was going to ask you what makes you good at this, right? And I think the fact that you've actually built up a home, flipped a home, I think that experience is really important in this, right? Because evaluating who you're lending to, if you've never been in that situation, it's got to be difficult.
I think to whatever extent I have or have not had success, I think a little bit of moxie, grit, blue collar work ethic, and doing the work and understanding it. When a real estate investor calls you and says, hey, my plans changed, and it's because I'm tearing up carpet and I'm finding that there's a great hardwood floor, and I think it might be easier to restore the floor, to be able to speak one-to-one and play pitch and catch with folks. And I think back for myself to where I either wanted to be an actor or a contractor in college. I went and did Second City, and I went and worked with my dad fixing and flipping houses. And my dad would take me out to, a house in Gary, Indiana that had issues, and somebody had called him, and we went out there, and the roof is falling in or the basement's flooded. And my mentality was always do the worst first, put on the hazmat suit and go rod the sewer and pump it out. And I would always see my dad smiling at me, or I'd come home and my mom would talk to me and say, still want to be a contractor and build these $1 billion homes, right? What did you think about what you did today? I'd look at the money in my hand and I'd appreciate how hard I worked for it. And it probably steered me more to college and getting into those world that I'm in now. But having that and being able to connect, everybody's got that story. We've got a podcast we do, and we talk to our investors and we talk to our borrowers and customers, and you hear that story almost to a T. Everybody that's successful at this, on whichever side of the fence they sit on, whether it's capital market investor, a fix and flip homeowner, borrower, or somebody in the servicer chair, those stories all seem to sound pretty true when they're successful. They know what it's like. You've been on your hands and knees putting carpet in, you recognize maybe it's something you don't want to do and you want to hire somebody, you'll learn that stuff.
Do you think the market's saturated? Like, do you think there's enough lending out there in this space? Do you think there'll be more? You think some lenders will kind of fall off? Like, what do you think happens the next few years?
It's another really solid question, right? I think it's equal parts. We're in a fun economic time is probably the best way to put it. And if I broke out the crystal ball, I can probably see a world in which there's some consolidation and some purchases and some entities merging together. And we're seeing a little bit of that right now. But I don't think the market is oversaturated. The demand is there. We probably spend more time underwriting and taking a look at loans that if it's not going to be us, the demand is there for somebody else to do that kind of loan. And there's so many in this asset class. If we talk about true business purpose lending, as it's kind of coined now, there's so many different parts to that asset class. Your tolerance might be for the fix and flip 12 to 18 month loan. And that's where you make your bread and butter. You might be the long-term rental. You might be the multifamily. There's a really large multifamily community out there. You might be the multi-property loans. You might be 25 homes on your block wrapped in one loan. And there's so much differentiation there that I think there's a lot of room for lenders in the space.
Where do you think you fit in? Where would you want to be? What type of lending would you want to be doing, ideally?
I think we want to be where we are. We work to be the premier business purpose lender. We want to work with the operators, big or small, who know what they're doing. One of the entire focuses we have is to lend where we live. I'm a Chicago guy. We're not going to sit out of a call center in Chicago, call a guy in Sacramento and talk to him and misspeak and speak as he's in San Diego or wherever. We go hire somebody that is a subject matter expert in Sacramento if we're lending there. We go hire the best guy. We've got a guy in Boston who is nothing shy of tremendous. And we go find the best person in DFW, in Boston, wherever it's at, and they lend. And we're ingrained in those communities. Those are folks that we see at events, right? We're going to host events. It's not simply a sales house. We are really soup to nuts, originations, beginning the process, construction management, boots on the ground asset managers that have a better, when I speak about my experience as a fix and flip guy, my asset managers know the location, know the builders, can help their borrowers get what they need all the way through servicing through the day you pay off. And then we help you come back and do more. I think that's us. And our products, we do all of that. We do the ground up. We do the fix and flip. We do the term rental. We do the multifamily. That's really all our bread and butter. We're not resi. There's a ton of great guys that do that and are excellent at it. Everybody knows those names. We truly are working to be that premier business purpose lender and servicer.
What happens when the loan defaults? I know there could be a million reasons a default occurs. I know there's a million different types of properties, a million different situations. What are you doing when a loan goes into default?
First, let me say this, and this might be a little counterculture where we're at today with technology, but I constantly circle back to a few people that have scaled businesses. One of them, Sam Walton, founds Walmart, Sam's Club. I love this theory and I love this feeling of when you walk into one of these places and there's a greeter. It's normally, I'll be very stereotypical, it's normally somebody that looks like my grandmother at the one I go to. And she sits there and she might not know my name, but she knows who I am from going in and she smiles and says hi. We have a little pleasantry. The one by me, I know a couple movies she likes, asked her if she saw this, saw that, you walk in and go about your day. Well, I became kind of obsessed with that a few years back of where does that get paid out of within that Walmart or that Sam's Club methodology? Where's her paycheck streaming through? And as I started reading on it, I became really interested in this piece that it's actually theft prevention. You're not doing that as marketing. That's what it feels like. And the feeling is all you really care about, right? And it feels great. But really, there's empirical evidence that that person that's greeting you and looking eye to eye and meeting you is actually somehow placing in your head that that's a place, if you were a person that's going to steal or eat a grape at the grocery store, like this is a place that I really treasure and I'm going to treat it as such. That's one side of my brain. The other side of my brain is, being fortunate enough to go to great places and have some great service, right? Going to your favorite restaurant, going to your favorite hotel chain, or for me, I've got a 6-year-old boy and a wife that have become obsessed with Disney, going to Disneyland, Disney World, whatever it might be. And I became kind of obsessed with this Disney guest service methodology. And when we went, and I can't turn my work brain off, and my wife wants to go with my son on the teacups or something that I'm too old, that'll make me dizzy, I'll go sit on the side with the Dole Whip or with whatever, and I'm watching the guest service folks deal with lines and deal with confusion and chaos that happens at a theme park, and people of all ages and all cultures and accents and languages. And I'm watching these unflappable, unshakable people. And in my work life, where I'm gearing our team to be, we've actually hired a woman from Disney now who's running, get rid of customer service. I don't like that term. And I think most of your viewers would agree that if they think of having to call their local DMV or cable company or anybody and wait online for customer service, it's your least favorite part of the day, right? Probably for you as well.
Sure.
Nobody loves waiting online for all that. So instead of that, I don't know, there's probably a place for chat bots and stuff like that. But in my business, this is business to business more than it is business to consumer. And that guest experience is everything. So our team is really dedicated on the front end to immediate communication, pick up the phone, reply to the email, meet people where they are in the market, understand that if they're in default, their day is probably a heck of a lot worse than yours in this moment. Treat them with the dignity and respect they have. And if you do that while the loan's going well and while everything's good, the second that something's not going well, often you're now a trusted advisor. You've gained that status. You're now seen as almost more of a consultant approach. And we have the borrowers call us and say, hey, Steve, hey, Logan, hey, Claudine, hey, whomever on the guest services, who do I talk to? Because my forced place insurance has gone through the roof. My rent roll is negative, and I'm foreseeing that I'm not going to be able to pay soon. And there's an issue. And when we have that, I really think that's a unique dynamic in the market. I think the adage of debt collecting and field chasing and things, there's always a part of that you're going to have. We have a collections team, we have a portfolio management team, we have all that. But if we can do things, and we've done this, if we can do things like bring the guarantors into the office, fly them out, have them drive, sit down, and have all my department heads around to try and figure a way out of the situation, to ultimately make a very quick question long. If we can get to a consultative approach and take a look and say, these are the brokers you should use. This is the run rate of your default interest and what you won't have equity. This is what you should do to get out of this situation. You have other sales that are going on. We can take the net proceeds, apply them to your oldest payment, not incur the default interest, work with you and our great attorneys, and make sure we try to prevent foreclosure. And we try to get you out ahead of time. It's a different approach, and it's proven to be in this segment and in this asset class. These are very savvy investors on the borrower side, and everybody knows what's at stake. Everybody knows the plays that can be run. Everybody knows the past, let's call it 15 years of mortgage servicing and the beats of the drum. So if you can be a little bit of a disruption to that and have both that consultative approach on the front end and guest services, and they attach a person and a face and a name that they can call, and then that person can round up the troops to make sure we stay on the same side of the table as the borrower, it proves to be more effective than that.
I love that for a lot of reasons. And I think getting into the attorney aspect, obviously I'm an attorney. I think that when you go to court and the borrower can't say, I've been calling my servicer for a year and I can't find anybody, and they can't say those things, but even going to the other extent, right? When they're speaking to an attorney on their side, their perspective of how the servicers treated them and worked with them is really important in developing their litigation strategy, how they're going to approach a foreclosure. If your ideas and your game plan with them doesn't work out and how they actually go to court, the fact that you've been having this longer conversation and they're seeing you as someone who's not just a faceless lender trying to take their property from them or the project from them, that relationship I think is really important. So I think that's definitely what makes you guys great and probably gives you a really big edge. Now you're telling the whole world about it, but I think it's a really smart and intelligent approach.
I'm happy to have any small part in collectively making all servicers better. And likewise, they share a million things that make me better and humble me every day. You've got a tough job. So if I can make your job easier, how about this? Recently, we talked to a borrower that everything was going kind of sideways. And my feedback, this was, I think, Christmas Eve. He called me. We spent about an hour and a half on the phone. And I said, I think sunlight is the best disinfectant. I think I should call my firm. You should call whomever you're working with. We should have you come in the office and we should do a couple things. We're going to serve you foreclosure papers. Let's just do it right there. Any questions can be answered. All the attorneys are there. Everybody's there. And then once we get past that, let's have kind of a community discussion on what you can do. And I don't know how often that happens. I would say not often, but for that person to come in with the other guarantor on the loan and for us to spend significant amount of time together, everybody in the room at the end of the day, sounds very weird to say, felt very positive about what the future could look like and the opportunities that could be there. And under no circumstance would I ever expect us to have difficulty in court with somebody not saying that we treated them with dignity and respect. And equally, from an attorney standpoint, boy, is that a better way to serve and to get that done.
And you're not being a service processor, which is an interesting way to see it. Look, Steve, I really appreciate it. You tell some great stories, and I think your strategies to this are very unique and very interesting to hear about. So I really appreciate you coming on.
Absolutely. I'll always appreciate it. And since it's on the record, I'd say thank you for sending me one of those jackets. I know it's in the mail and I look forward to it.